Hi everybody, it's Chris here from Student Education. Going to be doing the four majors this afternoon for the forthcoming week, which is the first week of March 2016, using the FX8 template, as you see in front of you, on the four majors. So, going to start with the euro against US dollar on the monthly. Let's have a look and see what's been happening over the last month or so, just to give us an idea or a bias of what we can expect going into the start of March. So, straight away you can see that the indicator box, my matrix we like to call it, like to look at the hard right edge over here to see the overall perspective of price action. You can see that there's a bit of negativity, but the one thing that really stands out is the MACD. Monthly, we've been in a negative trend since 2014. However, having said that, 2015 was more of a very consolidative period for us, or for price, and you can quite clearly see that price went sideways over the whole of 2015. And subsequently, as we went into 2016, you can clearly see that we've attempted the 2015 high, but yet again, we haven't been able to move out of this consolidative range that has been predominantly in place since 2015, in fact. So, when we drop down to the weekly time frame, we want to obviously be trading trend direction. It's vitally important that we actually trade with trend. And if I just mentioned now on the monthly analysis, we haven't been in a physical trend, then clearly we have to get out of this consolidation pattern. You can see when I drop down to the weekly that we saw euro strength coming in for 2016. We had this little intermediate uptrend here. Having said that, price fell yet again at the 2015 resistance level high here at 1148 and change. Okay, so we haven't seen price being able to get out of this consolidative range. The candlesticks are still red, so the overall bias is still negative. It's just that it's consolidative. We haven't got any selling power at the moment now to continue this negative trend. And in doing so, the MACD is obviously going to give us a bias to the upside because the MACD is trend related. If we don't have a trend, then it's clearly not going to be working. And that's clearly what's been happening over the last year or so. So clearly, if we are looking for further selling pressure, then we need to be trading outside of this range. So therefore, what we can do is we can either apply some sort of mechanism which will allow us to then put trigger alerts, then wait for currency or for price to actually break out of this particular range, and then and only then can we start looking for further opportunities. Looking here on the hard right edge, you'll notice on the weekly, if I just pan in here, you can see that price over the last couple of weeks has been trading above the 50-period moving average. Very, very important because we haven't been trading above this purple line, which is the 50-period moving average, since 2014. So psychologically, that's of importance because we're seeing a bit of euro strength now, getting above not only the 20, but also the 50-period moving average. Having said that, the last week we saw a lot of negativity coming into euro, and it's pushed us and closed below both the 20 and the 50 now. So we need, if we are to see further continued bullish bias in this consolidated range, to then give us a reattempt of the resistance level highs in 2015, and then a start of a potential in inverted commas potential new trend. Then we need to see price action remaining above the 50 and the 20 to start with, and then we'll start to see color candlestick color change, etc. At the moment, we only have a blue arrow, which pretty much tells us that there are more buyers than sellers. But clearly, the overall bias is still one of negativity. So we either going to look to this week's economic data to see if we're going to see any further euro negativity to push us back into play, or US dollar strength. Either or. Non-farm payroll this Friday, we could see something happening. The stats for this non-farm payroll is expected to see an increase. The prior figure was 151,000 jobs. They're expecting a forecast of 193. If it does indeed come out higher than 151, then we would see euro negativity, i.e. euro dropping, and then the US dollar strength. So vitally important to look at this week's data to see if we can see any opportunities that will give us a bias with the current trend. So keep that in mind. Moving on to sterling, looking at the monthly, here again you can see, looking at the hard right edge, hard left edge of the matrix, you can see that the overall trend is one of negativity, and that's clearly the case. We've seen price testing the 2008 body low last month, end of January, and February we've seen further negativity coming into it, as we saw some really, really bad data that came out for the referendum. And yes, Cameron apparently got what he wanted. However, that's left his followers. Boris came out against what Cameron etc. was saying, and that led to a lot of negativity last week. And sterling fell across a lot of its crosses. So there again, we've seen negativity, and it's clearly playing out this month for February. So going into March, if we see this candle close lower, then we could expect to see price heading towards those 2008 lows, and that would then see us trading towards the next point of that would be the actual 2000 low way down at the bottom. So at the moment now, clearly negativity. Moving on to the weekly, you can see we get a sell signal straight away. And the important thing I've yet to be aware of is that we've now, last week's candle has closed lower than a 1, 2, 3, 4, 5, 6 week support. Here at 142268. So psychologically, there again, breaking a consolidation support. That means we're seeing genuine selling bias, and that's reflective on the weekly. Everything is negative, and the R squared is complementing that selling. Here we go in the MACD. We see in the histogram growing longer, and everything is looking for further selling. So here again, when you drop down to your daily, weekly, your weekly and daily, look for that economic data to then project some sort of continuation. Look at the bias for this week for sterling to see if there's anything out there that's really going to continue the negative sentiment that we're seeing on this particular pair for the foreseeable future. So do your due diligence, tick all those boxes. At the moment now, we're clearly looking for selling pressure. So when we drop down to the daily, etc., look for continuation of the negative strength that we've seen over the past month or so. US dollar Swiss franc on the monthly. Yeah, very, very important. You can see that price has been attempting to make new highs. But the one thing we've seen that we've not been able to do recently is to break the current resistance level high that we saw at the end of 2015 and the start of 2016. 2016 support. The good thing is the US dollar is pretty much treading water at the moment. It's not broken back below the 2014 low, but it's not broken higher than the 2015 high. And if we're looking at positive trend here, as our matrix tells us, then we need to see new highs. And the longer we fail to see new highs, the less bullish pressure we see, and the more bearish pressure starts to come into play. So you can see that clearly happening on the weekly, where our MACD, which is trend related, if we're in a bull trend, then we want to see the weekly continuing that bull trend, and that's clearly not the case. We've gone sideways. Now the MACD is clearly gone negative, i.e. more sellers in the room than buyers. That's clearly not what we want to see. And so therefore this week we need to look at the US dollar crosses to see if there's any continued negativity that's going to play a major role. There again, look at any important data this week coming up for the US market as well as the Swiss franc to give us that bias. Okay, at the moment now, positive, but if we don't see new highs, there's less likely to see any new highs, therefore more selling pressure comes on board. Remember that. Trends need to see consecutive highs or consecutive lows to be considered a true directional trend. Don't see consecutive lows or highs, no trend. Consolidation means indecision. Indecision means nobody's trading. Apprehension, if you don't have anybody trading, well, you're not going to get any movement. So there again, trade trends, got to see the movement. At the moment, we clearly don't have that. So therefore, be vigilant. Be aware of data that's going to come in now and to help price. So if this is a genuine resistance level high, we need to see negativity coming in it. That's going to be seeing US dollar negativity, which means it's going to be ideally Swiss franc strength. That's going to Swiss franc safe haven. Are we seeing people moving more currency into safe haven or the safety of the Swiss franc? That remains to be seen. But do your due diligence, and you should be out on the winner. Last pair, the US dollar Japanese yen. Here again, you can see the monthly projecting a very strong uptrend. Has been so since the lows in 2011. But the one thing to see now is we haven't seen any new highs pretty much through most of 2015, and that's a concern. US dollar strength, we saw a lot of positiveness, interest rate hikes, quantitative easing program that went into this, $7 trillion or so. Where is the continued bullish upside? That's gone missing, guys, and that's a concern. And if you look at this month's candle playing out right now, you can see that negativity is really starting to bite. Why do you say that? Because you can see 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive months, price has found support at this level. Not being able to make new highs. Concern, consolidation, over the last 9 months. Not great, and a tight range at that. Okay, not good at all. And you can see the negativity starting to play through this month. So if February closes as it is right now below the 20-period moving average, you only have to look and see when the last time price was trading below the 20-period moving average, and that was back in 2012. So psychologically, that's not a good sign to give out, because that's telling you that there's a lot more sellers. People are not going to be buying then. They're going to look for obviously selling sentiment. So here again, look to this week's data to see if there's anything out there that could really continue this negative bias. So dropping down to the weekly, you can see right now that the 200-period moving average is still below price, but you can see that the candlesticks now have gone from blue to red, and that tells us there's more underlying selling bias on this particular pair. So therefore, look for opportunities. Look at the macroeconomics for both the US dollar and the yen to see if there's anything that comes out this week that's going to actually stimulate continued selling or continued buying for both currencies. Very, very important. As it stands at the moment now, more negativity is starting to come in for the US dollar. People are moving to the yen for safety. Okay, so there again, do due diligence, wait for price to give us an idea of what she wants to do, and then we trade the outcome. There are a number of opportunities, target levels to the downside, if we see continued negativity coming in for the US dollar this week. Very, very important. Histograms getting stronger. The RMO is below the zero level for the first time in as many years. As I mentioned, back to 2012 was the last time we saw the RMO trading below the zero, and through that period RMO has been above. Therefore, we're in a very strong uptrend. That seems to be waiting. It seems to be moving. We're seeing a change from now a bullish stance in the US dollar to one of a negative stance. So could this be the start of a negative trend for 2016? That remains to be seen, but if we continue to see negativity, then we continue to see negative trend. Okay, so there again, do due diligence, dot all your I's and cross your T's before looking for any opportunities. Okay guys, so that's the 4 majors using the FX8 for the analysis for the first week of March of 2016. Hope you have a fantastic week. Keep it simple, stick to the rules, and most importantly, trade serenely.